Welcome to Subramani. Many people I meet are very rich and manage their money pretty well. However, a lot of people who write into me literally live paycheck to paycheck, as they say in American terminology. And if they are in the markets, it's because they are trading and they constantly lose money in there. So I recently got a phone call from a girl I know who she's a clerk in a company for last 20 years, and her husband has lost about 6 lakhs in doing F&O trades, right? So I thought I should do a session saying what you need to know about investing to become wealthy, right? So you want to create wealth. Is that the main purpose why you're investing, or are you investing thinking of having fun in the market? If you are doing it for having fun in the market, it's a very, very expensive way to learn about yourself and your limits and what you will do and what you will not do. Now, when I say this person lost money, he lost about 2 years income, or at least 1 year's income. She's earning well because she's in a big company. She's got some small time ESOPs, etc. So she has some net worth, but he had no business doing F&O in a trade which he didn't even understand what was happening. What I also don't like about people losing 3-4 lakhs is it's not lost 3-4 lakhs at a time, right? It is lost in multiples of 10,000, which means you kept on doing trades hoping you will recover the money, right? That is the other thing that you did. Understand one thing, creating wealth is a long-term process. It does not happen overnight. When you look at somebody's portfolio is worth 10 crores or 12 crores, don't ask him anything. Don't ask him how much money he put. That's not important. Ask him when did he start. And you're very likely to be surprised with somebody saying 1977 or 1982 or things like that. So if somebody tells you 1982, you're talking of 38 years of investing. You cannot short circuit that. I find this even among wealth managers when they look at a financial advisor, independent financial advisor with assets. They do not look at the number of years which has taken for them to build that. It would have taken 25 years to build, say, a 500 crore or a 600 crore corpus, and people want it overnight. No, that will not happen. The fast lane to creating wealth is full of accidents. You will see many cars lying there heaped upon each other, right? So go and read books like The Millionaire Next Door. You realize that to reach those kind of levels of wealth, you need to be earning well, spending sensibly, and investing aggressively and very smartly. That is the only way that you have, right? There is the fast lane, there is the medium lane, there is the slow lane. The slow lane works the best. So don't be over enthusiastic, get into the fast lane, because wealth creation is multi-decade, multi-year, multi-decade, multi-generational wealth creation. Look at Tatas, Birlas, Vadias, Goenkas, anybody. This is not wealth created over one generation. It has been created over 3-4 generations, right? So it takes time to create wealth. Secondly, remember that investing is not only for the rich people. Of course, rich people invest. Of course, rich people have more money to invest. But for you, if you want to get rich, start with whatever amount you can at whatever age you are. You're never too young and never too old to invest, right? Buffett was 11 years old when he started investing. And I know many children whose parents have started doing an SIP when they were less than 1 year old, right? So somebody has to create wealth. Ideally, your great-great-grandfather should have created, or your great-grandfather should have created. But if they have not created, start now. Start with your children's money also. Teach them wealth management, because the most important thing which I see people forgetting, especially people my age who have earned a lot of money, they are not teaching wealth management skills to their children. That is the biggest risk you run in your wealth, because if your children are not interested in real estate and you have many real estate properties in various places, you have an office, you have 2 spare houses, you have given it on rent, you are collecting the rent, believe me, your children will not do all that. And if you have something more esoteric, like if you have art or any of those kind of assets, very unlikely that children will look after it. If you have a direct equity portfolio, your children may not be interested. So if you have 70 years of age or 65 years of age and you have a very complicated and a complex portfolio, creating wealth includes preserving wealth. So if you are, let's say, a fresh MBA and you have only 5,000 rupees to invest per month, or you have even less than that, start investing. That is your way to wealth. But for a 70-year-old with say 30-40 crores in assets, in equity, in art, in property, etc., the most important thing for him is not to create wealth, it is to preserve wealth. That is as important as creating, because if your children are not interested in a particular asset class, that asset class will get ignored. So teaching your children who are the people to talk with, creating a mentor around them, may not be for their life, that they will find, but for investing. Suppose you have a good friend who's been you have been working in a big multinational and you have a friend who is the CFO. He might be able to find you somebody who is a good investing expert and who is much younger than you, right? So you are 65 years of age or you are 70 years of age, you have wealth, your kids are say 35 years of age or 30 years of age, and you need to find them mentors who will teach them to whom they can turn before they take investment decisions, right? So wealth creation, wealth management is a pretty complicated process. What is applicable to a domestic servant for creating a corpus for her retirement or her for her illness downtime, that is very different, but that is also the process to create wealth, right? So it might take her 2 generations to reach even a corpus of 2 crores. That's fine, at least she has started the process. That's very important. So do that. Remember that investing is not only for the rich. Remember to master it in the long run. Think decades and years and decades and multi-generational before you do that. Look at understanding the cost. The cost of having an advisor is well advertised. The cost of not having an advisor can also be very hurtful. There are people who do not know the difference between doing things in ICICI Direct and doing a mutual fund direct. These are not people who are ready for do-it-yourself investment. You need to do a DIY provided you have an equity portfolio which you have created over the years, which means you have anyway been doing, because equity advising is not really available. Those who are available are expensive and not worth the money that you pay them. But you might go to some good guy and get a PMS done, right? So if you have money in multiples of 50 lakhs, you could go and get your PMS done, right? So do that. You can't always beat the fees. Sometimes what you have to look is, are you getting a return which is there to justify the fees? After fees, are you getting a good return? That's the thing to see. Also very simple things like keeping money in mutual funds with growth option is much better than keeping money in bank deposits and paying taxes. The amount of taxes which people pay on these things is ridiculously high. Don't worry too much about inflation. Your previous generation worried a lot about inflation. Inflation is very much under control since 2014 at least. So I'm not saying that inflation will vanish. No, inflation will not vanish. We will be at 6-7%, but it is not something that is going to break the bank, right? So even your RBI bonds gives you 7.15, which is greater than inflation which is currently prevailing. So don't worry too much about inflation. Getting to your first 1 lakh or getting to your first 10 lakhs or getting to your first 1 crore or even getting to your first $1 million US, getting the first one is difficult, and after that life becomes easier and you will create more wealth for yourselves going along. There is absolutely no doubt about that. Also understand that if you want to create wealth, you have to start investing right now, provided you are 18, 20, 22, whatever, or whatever age. You didn't start till 35, but start doing it right now, because the longer you put off, the harder it becomes. If you remember this book, where I've said invest rupees 40 a day. A lot of my classmates have said, how useful is it, the book, for us? It's not for you, it's for your children, it's for the 22-year-old. Please start now. Thanks.